As a summary, profits up, market caps down, and shareholders lacking confidence.
Yeah, David, that's what we see from review of the results. If you look at the mining industry, it really is an industry which is at the forefront of economic development. And when you look at the results, the market caps are down 25%, as you've mentioned. So from that perspective, really, we're seeing that market confidence from the investors is really not there. There's several reasons why it could be so. The fears that we have around the global economy, growth in demand as well, all those issues. These are the items that play a role in that part.
But it is a little puzzling. I mean, the growth rates may change. So China doesn't grow at 8%, it grows at 7% or 6%. Yeah. But the consensus surely is that places like India and China are going to continue to grow. Urbanization in China, of millions of people moving to the cities, they need to build things, they have a very hungry appetite for things like iron ore. So why would investors say these are not good shares to be in? Is it a very short-term view they're taking?
Yeah, David, we completely agree with you. We think it's a short-term view. If you look at the emerging economies, long-term fundamentals are there. Those economies are going to grow going forward. It might not be at the double-digit rates that we've seen recently. However, they still continue to grow going forward.
Looking at the market values, you say market values fell by 25%. That's the market cap. Returns to shareholders up more than 156%.
Yeah. David, whenever you have the situation where market caps are falling, the companies have had to react. And one of the ways they've reacted is by giving more cash back to the investors. It's one of the ways of trying to boost confidence in the market. However, we haven't seen any greater reactions. We're still waiting to see what's going to happen.
Looking at the mining industry as a whole, obviously there are various sectors and some of them are doing well while others aren't. So you have gold, which is a special case, for example, which has different kind of perceptions of its value to others. Iron ore and coal, it's quite clear what they are needed for. What are the variations within the sector that you've picked up?
Yeah, look, I think overall, if you look at iron ore, copper and coal, those would be the big commodities. And if you look at the trends that we looked at in the 2011 calendar year, we saw exactly that. The growth in iron ore was phenomenal. Coal and copper was actually the same, and gold came in as well on the back of the increase in commodity prices.
Now, looking at some of the countries too, you've got emerging markets, you've got places like South Africa, which historically is a deep mining country, largely. Costs are high here. Now, you talk about costs surging 25%, but revenues growing 26%. One senses that revenue number should be bigger, because if costs are going up by 25%, is that the reason for the lack of confidence? Because, and again, there must be variations.
Yeah, David, the issue of cost is a real concern. I think when you look at cost in general, you have to look at the assets that are coming on stream now. You find that those assets are in remote locations. Most of those assets, the cost of mining those ore bodies as well is very difficult. So the easy stuff has been mined already. You're left with ore bodies which are hard to mine. So as a result of that, I think, there's a general shift and an increase in the cost base for the mining industry. And you are very right. That has contributed as well to the decrease in confidence in the mining sector.
You make the point that the mining industry itself needs to market itself better.
Very true. They need to market it themselves better. And when you look at the mining industry, it's a very broad industry. One of the items that we looked at was the sustainability reporting, for instance. And looking at that, we found that the mining industry is, I think, a good job of doing it, although it's varied across different companies, and there's a bit of consolidation that needs to happen in terms of the format of the reporting.
The war for talent. I mean, all industries which require any specialist skills at all are saying we haven't got enough talent. But is it particularly bad in mining? I suppose, given the remote locations of a lot of places, it is. Yeah,
it's a real issue within the mining industry. If you look at where mining is going at the moment, the remote locations, the emerging markets, those are areas where you've got particular problems with finding skilled individuals within those communities. So from that perspective, the mining industry has got its work cut out in trying to resolve that matter. Sustainability, safety. Now, these are probably more top of mind than ever, and probably a source of irritation as much as concern to some executives because they want to get on with it. Yeah, David, I think if you look at the South African industry, I think it's a perfect example of how you can position safety to be part of your normal way of doing business. And within the South African environment, we've seen great legislation that has been passed around safety. And certainly the mining companies are doing their best as well to ensure that they adhere to the relevant regulations and ensure the safety of their personnel. So from a South African perspective, it's an area of great focus. And if you look at the rest of the world as well, there's an equal amount of focus when it comes to those issues.
Fascinating. It seems like there's so much money to be made, but the investors don't want to try and make it right now. That was Sizwe Masondo, who is partner in PwC's mining division.